All right, good morning. So must have been a wild ride last night. And interestingly, NASDAQ is still up there making new all-time highs here pre-market. I don't know what news may have started this, but the S&Ps, the Russell, and the Dow tanked while the NASDAQ futures just ignored the whole thing. But it started with a breakout failure, a little shock bar there, as it was just going sideways after a red bar ignored. You can see then at 2 o'clock in the morning, it popped up above the highs and started to come in. And this is the what I'd call the power of the void, meaning the momentum move up, and there was little consolidation right there. But once something like this has this type of a power move, and it just starts to unwind, and it starts to become more evident that something's going on, more traders just start hitting the bid, and there's nothing to trade against. And so it just falls and falls and falls until it reaches some support. Why did it stop here? Well, there's nothing to the left. You can even see the 15-minute chart, how it dropped. So it, rather than falling all the way down here, it's the idea or concept that we call creating support. Just looking at here, it creates a pivot. Whenever it pops back up, you got a little extended there. It's 5 o'clock in the morning. And once it creates a pivot, it provides a reference point to trade against, at least for a scalp. And now we've got, at least one pivot high up here and now two pivot lows. And obviously a bearish move to the downside, negating this. Now, this hasn't been the norm of what we've seen. We are talking, pre-market here, but what we've seen more often in this market is what happened yesterday. The nasty drop, that looks like it's the start of something lower, and then it just rallies right back up again. So now we've got this nasty down move that's starting here pre-market, or has started. And we'll see, can it rally back up, or does this drag the NASDAQ back down? So far, the 5-minute is just kind of meandering around here like it's going to take another drop, as it built up this little bottom here, popped up and nailed back right back down again. So we'll see where this ends, going along the theme that I talked about over the last, week or so. Actually started, I guess, last week, of a potential M top. It's still not your classic, but now that this popped up here, now, we're looking at the futures. The SPX won't look like this since it doesn't have the pre-market data. It's just going to open up as an inside bar. So not that big of a deal looking at it from that point of view. We'll see where this ends up, but if it should close down here, we're going to have, more of the classic M top type of pattern. And if the NASDAQ should turn lower, I think that pretty much is going to solidify it. And then we'll just see what next week brings. We've got some of these big earnings reports are all out. It's was it NVIDIA that reported? And that's up here. So with all the big stocks out there reporting, what is there left? Let's see what happens here. So let me look at spiders and we'll get to SPX. So spiders are down here, just looking where they're at, 469, 468, which is, the gap down, really not that big of a deal. But we did have a bottoming tail bar. So at the end of the day yesterday, again, talking about that sell-off that happened yesterday in the morning, and it broke these lows, and it looked like, okay, here we go, going to go lower, and it winds up, holding, that prior congestion to the left there, and rips right back up toward the top of the trading range. And this is a pattern that I do like as a type of continuation pattern, since it went sideways for several days here, and then it breaks the low and recovers. So it's still got a shot, even though it's gapping down here. If it can get back above that high, we might see this rally. But going back toward the futures, you know, those that are looking at this are going to be aware that there's this big area up there. So it gets a little confusing having to look through so many different things trying to figure out what's going on. But that's the way it is when markets are consolidating. They get extended. Is it a what we call a time correction where it goes higher, or is it a topping pattern? And you don't really know until you know. Everybody wants to know ahead of time, but we need some type of a pattern that gives us that guidance. So maybe at the end of the day today, if prices are still trading above yesterday's low, or at least above the half, let's say the 50% mark of that bar, it starts to look more like a time correction that can go higher. On the other hand, if what's happened overnight shows us a bar that is closing near the low, a red bar, that opens up a little bit lower and is closing down here, well, then we've got our classic type of an M top type of a pattern that points to lower prices. Now, with SPX, it's going by the rejection of what happened overnight, that they can't get back up there. There is premium at 47.35. And if it pops back up, you can go 40. But use this here. Why isn't this showing me the data? Looking at why it's not showing me the data where I'm at here on the scale. But anyway, 47, 35, 40. And that bar's high. 47.18. So we talked about the open interest here, the big open interest at 4,700. And so now at the expiration, and so maybe this thing is free to get out of here. Well, it's been whipping back and forth, but closing at that level. 45.95 for Monday. Well, I think McGraw, if we see continued weakness, I think that's probably a decent bet. 45.95, 45.95 down here. You're talking Monday, over a weekend. That's hard. I mean, if this closes with a nasty thing, could it come down here? That's a big move. You wouldn't think so in a day, but where does today end? So I don't know. Let's talk about that later in the day and see where things are at. If it's down here, if it is weak, the premiums will increase, and we can maybe go even consider a bit lower. So as of today, I've got 46.05 written down, which 46.05 today, I think that's a no-brainer. And just look, I have to, hedge everything, some of the things I say, because when I talk about credit spreads, I talk about it from the point of view, it's impossible to go there. And we all know anything is possible, but just looking at the charts and average true range, what's been happening here, to think 46.05 today, I think the chances are like, 1% or less that it would go down there. And I think that's a reasonable bet. And now that we've got this pre-market move to the downside and those premiums pop, well, it's an advantage. If you can look at the chart and look at what's to the left and say, well, it's hasn't gotten below yesterday's low, so that's one line. You've got this congestion here. That's another line, and of course the pivot. And then once it breaks there, of course, it's like, hey, you've got the 20 MA. Can it get through all of that and get down here to 4,600? I think it's unlikely. All right. Now, what happened overnight, it happened in other markets. And yesterday I talked about these overlapping opens and closes here. And it kind of held that area. You can see the cross mark there on the hourly chart is, while it dipped down there a little bit, that's the area where it stopped and then went up to and just came up to the resistance to the left. And we got the same, at 2 o'clock in the morning, that breakout failure. And it's like, okay, breakout failure. Is it that big of a deal in the moment? No. But to get this to drop like that, I'm not following the news, but clearly, other than the NASDAQ, everybody started hitting the bid. Australia lockdown was the catalyst. So more coronavirus bullshit, Austria. All right. All right. Well, this market walks on eggshells. It truly does. And that's why I believe we see it trade the way it does, because we see it in individual stocks or the broader markets that, in the morning or on one day, it's like sell everything, someone's yelling fire and everybody's sitting in the bid. And it could be an hour later or the next day. It's like, oh, false alarm. Everybody take the offer. Let's take it back up again. So it's been a bit crazy. It's starting to inch up here a little bit. I like that kind of price action anyway for a start of something as a bottoming pattern. It does have that pivot right there. So we'll see. Anyway, this is starting to hold here. Let me look at the S&Ps again. Yeah, coming back up a little bit. Anyway, Q's coming in a little bit opposite. Well, it's what it's been doing. Look, just look at this mess. Trading this is just, trying to put your hand in a guillotine and seeing if it won't take it off. But it's just such messy type of stuff going on here. See this the way this is coming in. Anyway, pushed up above highs, the greater than 100% retracement, and we'll see if it holds the open, which is, here's the opening price. Right about there at that pivot low down there at 16,512 or so, give or take. We don't have to know exactly what it is, 510, whatever. All right. The Dow, which has been lagging, lower high, lower low, coming down into this area here. So whatever's going on here, I don't count out the possibility of a rally into the end of the year, because this is the type of a pattern that I would hope would develop. Meaning this momentum move, this is a support. It makes a lower high, lower low, comes down there, begins to stabilize, which, unless this turns into a big bottoming tail bar today, we're into next week where maybe it takes a day or two and we get a move. Now, something that we'll look further into in the weekend letter, but I mean, this is the kind of thing that you see markets that are holding up well, different stocks that are doing well, right? There are others, plenty that aren't, but this is a display of what's happening across a vast amount of stocks. And while we see this is a better picture that matches the Dow, but this is looking at thousands of stocks. And so you see the Qs going up, and you see the S&Ps holding up relatively well. Here's the S&P up here. And you've got this deterioration that's been going on for a couple of weeks. And the breadth and the sentiment is just staying up here, bullish, more call buying, betting that it's going to go up. We know that open interest is pinned at 4,700. And it's, I've used the term before, and Dan used it yesterday with some of the action that we've seen in some of these bottoming stocks, is that it's a minefield out there. So, and we say that because we see patterns historically that have a high tendency to do well, even in the short term over several days or a week or two, and they start to do well and they fall apart. And so the minefield is, you don't know where the mind is, where you're seeing things that look coast is clear, and before you know it, you're stepping on it, and you lost a few toes. But that's the way it is right now. All right, silver still correcting a bit, still looks fine. Gold holding up quite nicely, and momentum move, time correction looks fine. Crude oil, obviously the what do they say? I don't know if it's a good analogy. The emperor with no clothes there, and these politicians trying to, I guess, eliminate oil through making it expensive. And I guess part of what they're talking about maybe has some teeth. I don't know. We'll see. I don't know if they get to vote. Anybody know, did they vote last night as to did the House pass this next couple of $1 trillion? It's really a concern where what these people are doing. I think so. That just spending and spending and spending, and what, and I'll use the term again because it fits. What bullshit that it's not going to cost us anything. It's really crazy. All right, so crude oil coming down. So far, it's under its 50 MA. There's some support over here. We'll see if it holds. The weekly chart's still on an uptrend, and it's pulling back toward this minor support and the 20 over there. By the way, that the 20 is equal to the 100. That's how we look at moving averages. So those that use moving averages, the 100 MA will be in that area. And Bitcoin. Well, it broke that pivot. So one of the things you need to look at with support and resistance is, are there multiple areas of support, in this case, clustered together? So as prices start to break one, where's the next one that'll hold it? And that typically results in some type of choppy price action. You see Bitcoin came down, breaks the pivot, momentum picks up a bit, and hits the 50 MA and these overlapping bars, and buyers step up. So now can it start to repair the damage of breaking the uptrend here? Not on the weekly, but on the daily it has. And so we'll see if it starts to move back and forth here to start to repair this pullback. And transports pulling back, they still look okay. And interest rates just been wild all over the place, gapping down. And we know, I mentioned yesterday, financials were weakening. They continue to. So it's still pretty messy out there. All yours, Dan.
Good morning. Happy Zero DTE Day. Yeah, I posted a list of a couple Zero DTE candidates. So let's focus on those at the open. So yeah, lockdown in Austria is hurting travel stocks. So our only problem child here is Expedia. It's not gapping under the stop, but still not acting right. So I'll keep an eye on that, of course. Everything else is fine. We did a little zero DTE put spread on this, not 1 DTE. We did it right on this stabilization on the 15-minute chart. We got the 110s now with the gap up. That the Ryman looks like a day trade long, and maybe a second zero DTE trade with a higher strike. So that's a beautiful gap with a day trade with a price void here. So I'll watch that. So yeah, UAL, Kook, it's not Kook, it's the Carnival. They were breaking down crazy rally here in the last 30-40 minutes here. Look at that, spiders filling the gap now. Crazy. Diamonds no, IWM no, Qs all-time highs. Amazon was incredible strength yesterday. We had a great put spread on that. And you look at this beautiful 1, 2, 3, And you say, well, why didn't we do a directional? Looks like a no-brainer right now. Facebook is nice pre-market. This is on my list for zero DTE. Shop a call spread. No, I'm sorry, shop is a put spread. I've been watching this one all week long, and it's holding very well. Now it's gapping over yesterday's high. We might even put on a put spread for next week. AMAT had earnings. This gapping down. This is a call spread candidate. Snow getting extended, gapping down. Call spread candidate. All zero DTE for now, unless I say otherwise. Like that Snow. Boeing gapping down from a mess. That's a call spread candidate. Myrna, nice up $12, nice 15-minute close. That's a put spread candidate. So some of these I didn't have on that list. So Adam. So Myrna. Put it on another window. Beaky had earnings. This could be a gap in crap. This could be a call spread, zero DTE. It's strong, but you know, things that, hey, this is a measured move, right? Type of little thing. A little 2 to 3 bar consolidation and then keeps going. So I'll put Beaky right here. And when their earnings, you know, we're going to get more. I read in the journal, CVS is going to close like 900 stores over the next couple of years. And it's in today's paper, which I'm assuming the news was out yesterday. So maybe that's what created that. And it's gapping down here a little bit. So this will be a beautiful, beautiful 1, 2, 3. I will put this in the weekend letter if it closes with an inside bar in the upper third, preferably red with a gap down. Beautiful setup. Into it, yeah, 7-Eleven. Well, you know what? Let's watch that one too as a zero DTE trade. Just because it's a big old gap, and if we can get a 15-minute chart that shows that it's topped out, then sure. I'm assuming that's what you're talking about, David, because otherwise, you know, 100 points up means nothing to me unless I'm looking at the context of the chart. Microsoft, Diego, that's asking about continuation long. As long as the NASDAQ stays strong, then yeah, that's at all-time highs. It was Microsoft, Apple, Amazon, Google yesterday, and NVIDIA. They were strong as can be. Now, NVIDIA, I don't know what to do with this. I don't know. Maybe 30-minute high, a zero DTE put spread, 30-minute low call spread. I mean, only for, let's see, we're just talking a couple hours. Hood, I read in the journal that the class action where they were conspiring with Citadel Securities over that GME, remember fiasco, those short squeeze, got dismissed. So that's good news for them, obviously. You get a judge to dismiss an attack on you. So I don't know what's up with that. That had an ugly, I had no idea what else caused this with that good news. Maybe just, I don't know. Maybe just falling with Bitcoin or something. Bitcoin's actually down again. Now it cracked 58,000. Pan W. Here's another one for a put spread. That looks fantastic. I'm running out of windows here. I got so many things I'm looking at. But yeah, Pan W gap breakout to all-time highs from a base. Now that could be a candidate for one for next week. because it's gapping from this multi-week consolidation. So put it in a window and let's see what it does. And I'll talk to you in 30 minutes about it. 284. Yeah, I mean, just Franklin, you got to be a little more, insightful. Tell me what you're thinking. The only thing I'd be thinking is out of the money call spread. Workday 290. Oh, it's right there. That's what I just was about to get to. I don't like the way this trades at all. Look at these overlapping bars. If technical analysis was like this all the time, then I don't think it would work. I mean, how the heck can you predict anything on this chart? So that just gives me a headache looking at it. And I mean, you would need different strategies. Like, all right, I'll sell a 54.8 put, and then that'd be fine. Yeah, let's see. This is just gapping. It looks like it's too gappy in light volume. I'm getting rid of you. Hey, yes, Minna. Glob, I can't see where it's at gapping. It's showing it's gapping up $4. But if this trades over yesterday's high, then it's a buy setup on the 50 on support. It's a deep retracement, so we don't expect a new high, which is totally fine. We're short-term traders. I think over yesterday's high, this goes to 335. See, I just eyeball the target. MATW light volume, but look at those. Look at the weekly and monthly. Look, kind of inverse head and shoulders here. Left shoulder, small head. This could go to 41 bucks, but now I see it gapping down. I didn't see where the gap was pre-market, but now I just saw it print at 37. We'll come back to you anyway. Not crazy about the way this trades, but if it were to close here, it's a bullish 1, 2, 3. All right, let's focus on the list I gave so we're not too distracted. Williams Sonoma had earnings. This is a candidate also for a 0 DTE call spread. Wow, Fitch is getting whacked. That is a nasty, nasty Bear Island reversal. What? I don't know if that was earnings or what, but that is ugly. That's an ugly gap.